I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So world markets are up or down slightly this morning, with our futures down just a little bit after a pretty quiet day in the market yesterday, although there was some individual stock action. What are your thoughts on the S&P, Scott?
I just think we've seen a monster move this year, as well as, 5% in July. So, a few inside days above the prior breakout makes sense. If you look here at the chart of the SPX, you will see that here is the trend that's been intact since November, coming all the way up to finally, remember this was that May 22nd high where you had your first almost 6% pullback. From there, you saw a nice movement. You saw a move off the lows. You saw a digestion right here. And then when we took back the 50-day, that was when we said, okay, trend resumes. You had a spirited move back towards the highs, digested for 14, 15 sessions. Then here we took that out. And now look right there. Take a closer look here. It's been digesting right above that prior breakout. So the longer we stay above this breakout area of 1697, the higher the probability we continue to, I think, 1725 to 1740. Even if they try and shake things up a little bit, we could hold a 21-day. Just that means the speed changes a little bit. But for the current complexion to stay intact, all we need to do is go sideways and stay above 1697.
Well, it is noteworthy to mention this morning that the Nikkei is up about 1%. And the EWJ has given us different opportunities at different ends of the range. And although the behavior we've seen has been somewhat erratic, it is still showing commitment to its bounce off its lows.
Yes, and it's just been, again, when you have that size of a range, you have to be either very loose or you be very short-term tactical. And if you look here at the EWJ, you will see here is that May 22nd high. Here was that red dog reversal low, or just say your hangman low. From there, you had a quick move up to this trend line, came back down, made a higher low. From there, it was a little bit more of a straight line where we broke through this trend line, held above, went all the way to this area. Remember this area? It got a little shaky when you had, a quick 6% move down. Talked a little bit about this being a buying opportunity versus trend line, and now we're right back here. So what now looks like is a big pennant type formation that's digesting a huge move that we've seen since the start of the year. So at this particular point, I still think with what they're doing over there, you could stay the course. Just either take a very big step back approach or trade it tactically, because there's tons of percentage moves in there, as well as in just say the DXY and Toyota and some of the currency type models.
Well, as we look for opportunities during these slow August days, one of Scott's strategies that he uses to find trades is looking for gap ups after earnings and digestion. And 2 prime examples of that: Apple, Facebook.
Right. So these 2 type of strategies are good to get entries in for tactics. And as far as just say Apple as an example, stock's been crushed. You look here at the stock, and ever since the high of 700, this was a level that broke, which was around 660. This was another level or another trend at 600. And from there, we've been trying to play bounces. So with that said, you have this bottom type formation. And if you follow us close, we've been talking about isolating, a nice tactical play. What happens after earnings? Earnings gapped up. You digested above it. You could have bought in this 3-day base, added when it broke this trend line, and now here we are at the 200-day at 469. I did take mine off yesterday, and I'm going to wait to see if it could go sideways again to continue. But overall, a nice tactical week-and-a-half play for Apple. Then if you look one more time at Facebook, this too, you could have played it a lot of different ways. Here was that cup and handle formation. Here's your cup. Here's the descending trend line. Busted through it on earnings after hours, and if you missed that, this was the same type of tactic. What you did is you had a gap up after earnings, showing you commitment to a major move, maybe some shorts trapped, etc. And then this is where your trigger was. Your trigger was right around 34.89. Now here we are coming close to 40. So I think what we want to do in this morning call, Brittany, is find situations that are similar but a little different that could be on the radar.
Right, that could still provide us opportunity. And one example of that is LinkedIn. LinkedIn had a big gap up on Friday on solid earnings and held that gap well yesterday, so this could be one to keep on our radar for continuation.
Yes, and we don't know if it's going to be 2 days, 3 days, 5 days, etc., but at least we have levels to trade against, especially if you're not in it. And if you look here at this chart, very tight. Okay, here's your 2-day range on LinkedIn. So here's your low end of the range, 228. Here's your high end. Maybe it stays another few days, but if it starts getting above yesterday's high of 236 and then closes above or stays above 237 for a little bit, you could then see continuation north of 240. This also, one of my 3 amigos that we talked about many different times last year on something that you could throw in the drawer that's more than a trade. And here's this cup and handle pattern that we've talked about. And this was that handle break above. So if you missed all this, which hopefully you didn't, now you can maybe tactically look for some kind of cash flow right in this area. And this is the strategy to trade against the gap for future movement.
Another example, AIG gapped up on Friday after beating earnings and announcing it would return cash to shareholders and is holding.
Yes, and I don't particularly love this name, but people like to trade it, so I want to just show you that you take your likes and dislikes out of it. This one gapped up, looks pretty good. You know, yesterday made it look better than the prior day. Here is your gap up after earnings. You know, not much follow through, but it did have a huge move, you know, before then. Then yesterday, while the indices were flat, it kind of held the gap and was green. So you can maybe buy a little bit in this gap versus the low here of 47.78, or you could just wait for it to consolidate a little bit more. This type of stock might not just be a barn burner to the upside, but the longer it stays here, the higher the probability you get some motion if the market stays in there. And this level here is 49.50. A close above there, you know, who knows? You have 50 plus.
And Viacom got a lift on Friday after reporting a 20% jump in fiscal third quarter earnings, doubling its buyback program. This stock's been on the run for quite some time, so it doesn't really look like it's getting ready to slow down.
No, it's got a big gap. It's what's cool is you see all these different types of stocks, different groups, but similar patterns. Okay, with each one of these different patterns, you know, there's different speed, different movement. You have to learn how they go, but the pattern is similar. Okay, so you look here at Viacom, stocks had a really big move. Okay, trending higher, and gapped up into earnings. Okay, now it's trying to hold the gap. Okay, the question is how long will this gap hold for? The longer it holds, the higher the probability it digests in here to go again. So here it is. You could trade long versus this 77.95. And if just say part of this strategy is if it starts to come in and fills a big portion of the gap, that means that it was priced in and not even that strong, and that strategy doesn't work. But if it does, you know, here's yesterday's high. Yesterday's high is 79.50, and then this is the high of earnings. So write down those levels if you're a Viacom trading fan.
And SodaStream gapped up on Wednesday after reporting great second quarter earnings and boosting its full year revenue outlook, and is flagging. So this could be another one for opportunity.
Yes. You know, I like this one, and this one has has some shorts involved, so when it wants to go, it can go. I'm not sure what kind of catalyst it might need, but overall, you know, you look at the gap up here, you know, it ignited a move, it's been going sideways. Here is that level, okay? It was a laggard type trade at the bottom end of the range, so not as strong. Here is your gap up. Now it's gone sideways for 4 days. You could be long versus this 63.80, and then if it starts breaking above this little trend line here, you could add to it for what could be motion to the upside. So look at these 4 or 5 different types of names, similar strategies that could yield different but similar results.
All right, well, coming up, we're going to go in the trenches with the TBTs, gold, silver, and the GDX. But first, quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the TBTs, gold, silver, and the GDX. First, as rates go higher, Scott's thesis of going long the TBT is acting well.
Yes, it took like a few jobs reports for that strong one to finally wake up yield, so to speak, and since then the trend's been strong. And we recommended 2 ways to go about it: trade the trend or throw it in the drawer, and in 6 to 18 months it should be higher. And if you look at the chart of the TBTs, you will see, this is when it was at the bottom end of the range, and then it just ignited. Okay, broke above 70, held above 70. This is where we are now. You want to take a closer look here at this trend. The trend has been strong. It's a little erratic to trade, but if you've been sitting in it, you're doing pretty well. It's been holding above the 21-day for the majority of this. So every time it's touched a 21-day, if you bought that dip, you did pretty well. So here we are at the top end of the range. I do think it's just a matter of time for it to take out 78.63 for that road to 80 plus for the end of the year, and I think it could happen in the fall. You could see probably even closer to 85. In the beginning of the year, I was talking 80.
Well, in terms of the metals, gold and silver had a nice bounce off their lows, and although they seem to be potentially weakening, do you think these trends are broken still?
Well, the trends have been broken most of the year, and then finally we had those blood on the street lows that we talked about for some type of tactical move. Okay, you look here at gold, you will see that the trend has been to the downside, triggered for most different patterns. One was at this pennant right here, one was at 161 when no one really knew what gold was going to do. From there, it broke to the downside. Then it hovered down here and then broke below 150, which was your macro way out. If you want to take a look going sideways, why we were very focused on that level, here it is. It held for multiple months. When that breaks, you get out of the way. So fast forward to where we are now. Okay, you had that red dog reversal off the lows, right here. Okay, so your buy could have been through 115.65. From there, higher low all the way to this trend line, and now it feels like it's breaking. Okay, I think a lot of guys were focused on it until it started to trade below this little area of around 127. It's down today. I don't think many traders are really interested anymore in it because you had this oversold move. So I would say if it does get down to this area, maybe it's worth a look, 122.73. And if it were to hold, there's still a slight chance that it can continue to the upside. But overall, this is a B minus type trade and has a lot to prove.
So would you then be any more interested in the GDX?
Well, I'm interested in watching it because the gold miners led the move off the lows with silver actually. And if you look here, kind of similar. It's just bending right now, a little lethargic, out of play. You actually look here, all the way from the highs here, it seems as if it really never broke this trend line. Yes, we had a decent tradable move, off of here, but think about how in relative terms, how many peanuts it was, considering now that it's turning back lower. So, this has to be like the perfect setup for me to take a look. And right now, it looks like it's just drifting lower. So maybe you get like some type of 80-20 trade with the 25-34 area. And again, this would probably be, the line in the sand for multiple people. Okay, right around 24. But again, this only when it's very compelling, when it's blaring like it did right here to fill this gap. Otherwise, this trend line is still very strong.
All right, time for some quick hits here. Let's talk Google, which is trying to build support above 896, 900. What do you think it needs to do to pick up momentum?
I think it needs to trade above 907, hold above it for 30 minutes. Then I think it could be back on the road to the highs.
All right, and Tesla built onto last week's strength yesterday with another 4.8%. Where's our new point of reference to trade around?
Well, it's actually opening up today at another historic high. We've been pounding the table for 140 to 160 while every naysayer in the world has been talking valuation, talking fad stock, talking whatever. Here's the pattern. It's been great, holding above the 21-day except for this one point when it broke below but then reclaimed it with this red dog reversal down here at 107.30. Tight range, there you go. At this point with earnings Wednesday, if you're never bought Tesla, I wouldn't recommend buying it, even if it does go north of 150, 170. I think you need a better setup. And if you're in it and you want to hedge yourself a little bit, maybe buy a put spread, and stay long the stock. So this way, if it does trade lower, you're hedged, or just trim it and then figure it out. And as a trader, we'll be trading it after hours. Because of the way it's extended and the premium is so high, I probably am not going to take an option strategy into it like I did with Apple, Facebook,
right.
LinkedIn, and Google.
All right, how about Solar City? Triggered the price point sheet buy price of $42.80 yesterday, closed above the prior pivot high of $44.98. Should we expect upside follow through?
Well, yesterday was a pretty big percentage gain, so it might not just have a second day so quick. But ultimately, you look at this breakout, it was strong, and it showed relative strength most of the day. Go to the chart here. This was a really nice day for some guys in the chat room. Broke above it, even broke above this. So I would want to see it hold at least half of it. I'm not sure what it's doing pre-market, but if it's down pre-market and trades through yesterday's high of 45.49, you could see some more continuation. This has been a great vehicle. You know, I definitely have a man session on Elon Musk, and rightly so. The guy is an innovator, he's a leader, and his stocks have been working, so why fight him?
Man crush?
I have a man crush.
Man crush
man
on,
session? Oh,
yeah,
man
I knew
crush.
that's what you meant.
Something like that.
All right, how about X1, which perked up yesterday after basing around its 8 and 21 day yesterday for a few sessions. What are the key levels you're watching here?
Well, this one has a decent pennant. It's had such a monster run, and then finally it went through like a consolidation period. And if you look here at X1, you will see that, you know, it's getting very tight. And whenever this stock gets tight, you want to take a look. You know, here is when you had, you know, the capitulation lows here too. I remember that day. I think Mike Lee and Steve LeVay were all over it. Since then, getting tighter and tighter. So I don't know if it's going to be earnings that needs to, you know, for it to take place, but above 65, 66, I don't think the historic highs are in here on this stock. I think it's something that has the ingredients to continue because of the space is very, you know, up and coming, or it's been up and coming, but can continue. Triple D, you know, the earnings weren't all that everyone thought, but ultimately, if you look at Triple D, because it's going to need some help from the leadership, it's still, you know, trending higher. It's very tight right here. You have an upper channel that it's trying to absorb. So I think at some point this actually could wake up, and for that to happen, it's got to get above 48.50 and stay above it with some authority, because this stock tends to be a little erratic.
And Visa has done a great job erasing losses from last Wednesday. After some upgrades on Friday, it was able to reclaim the 50-day yesterday. So on your radar today.
Yeah, I think a lot of guys are trying to find that low, and it was very tough when it was going through that volatility. You look at it now, I think the compelling part of this bounce has already taken place. You look at the chart, you know, from where it was here, you know, around 190 all the way down to 175. Some guys took some risk buying it down there. If that was you, congratulations. Now it's coming right back into resistance. So I don't think it's just going to blast through 185. It might need a little bit of time. So, you know, see if it could stay above, you know, 180 for a few sessions before you get aggressive again.
All right, Scott, so your strategy as you head into the trading session today.
I think I'm going to look at a lot of those gap up consolidation plays. I'm in some of them, and I'm looking to see if I see any relative strength for continuation. I also want to make sure that we hold above, you know, 1698 or 1701. The longer we stay above that area, maybe the higher the probability we even get, you know, movement back in the banks that are still hovering by highs in some of the other key sectors to make it more macro versus, you know, more of the thin mid-tier type stocks. So with that said, you know, I don't think there's any reason to stay, you know, to veer from the course of what's been taking place. If we got a potent close, a very potent close below 1698, maybe some risk off, go for a cute short, and then see what August leads to. But the longer we stay in this current trend, you know, I'd rather stick with it and look for where the relative strength and the tight patterns are forming.
There you go. That's your morning call for this Tuesday. Happy trading, everyone. Have a great day.